What's up, guys? And this is actually a different type of video. I actually just completed a live stream with a YouTuber in the finance space that I really like. We covered a whole load of topics like the metaverse, Alibaba, Kathy Woods, index investing, and just what our perspectives are on the general economy. So once again, it's a little bit of a different video. It's actually the first live stream that I've done since I've been a YouTuber, and I really enjoyed the conversation. I really hope you guys too. Here's the video.
Value investor. Return on equity is assets minus liabilities. A lot of
Oops.
this conservative get. Stock is currently at 182. The low price is still higher than the current price. I'm a buyer.
Oops.
I'm Paul. I'm a value investor. But the real true investor is the one that does well during a bad time. I have Baba, Carnival Cruise Line, Farmers Bank, HPQ, Intel, Facebook, Miller Knoll, Sleep Number, Smith & Wesson, Steelcase, GDX, GDXJ, and Walgreens.
Oops. I don't pay attention.
So you never know who's naked, and I rarely say too hard.
I think my dad finally feels I'm not a failure.
I think so.
Because of everything money, you think?
Yeah, probably because of everything. No, everything money, he thinks I'm not a failure.
Holy smokers, ladies and gentlemen. We got a special guest today. More money.
What's up? Baba Shill in the building.
I know. I heard you're paid by Alibaba. I heard they sponsor you on YouTube. Is that true?
You know what? I actually recommended that they sponsor Everything Money as well. Just getting that cool China cash. No, I'm kidding. You know what? The funny thing is, you're the only one that called them out on that. So when he actually said that, I went into their comments for that video. So if you guys aren't aware, people who are watching right now, everything money. What's that guy's name? Is his name Paul? I think it's Paul, right? So he said Alibaba reached out to him to recommend the stock on their channel. And I went into the comments. I'm like, there's no way the people who watch this believe in this. And then that nobody really picked it up in the comments. But then that same day you picked it up on your channel and you were making fun of them for it. I'm like, okay, this guy knows what he's talking about. Because there's no IR person in the world, investor relations person in the world that's watching YouTube and having YouTubers promote the stock. It makes no sense at all, you know? And so
the only time it does make sense is if you want to like pump and dump a penny stock. I can see that happening, but a massive corporation like Alibaba, I don't believe that. Honestly, he probably got an email from a spammer and he's so freaking stupid that he thought it was legit. Because you probably get those all the time too, don't you?
Well, I am IR, right? Like, so at most companies that I've worked for, I'm essentially only the IR department. And so like the only people we ever talk to is the street, right? Like Wall Street or Bay Street in Toronto or whatever. That's the only people we talk to. And when it comes to like getting emails as a YouTuber, I get nonstop either spam emails or garbage crypto exchange emails or people that want to edit my videos and stuff. But it's like you know, going back to the pushing like the crypto and stuff, it's like easy to see what's garbage, and like it's so easy to just like not take that money and not push it, you know? And so it was very interesting to me that you picked them up. You want to know how I actually found your channel, believe it or not?
Would you type in sexy man?
I typed in biggest biceps in finance. That's how. No, I'm kidding. No, you know what I did actually? I'll lose the foo-foo hat, but I actually got angry when that whole FTX thing happened. And if you ever watched my channel, it's actually very boring. It's very like academic. I walk people through how I model companies, how to think about like risk and that kind of stuff. I actually got really angry when none of them were taking accountability. And there was actually one YouTuber that I previously liked because he would call out other like scammers. And I forgot his name. I'll remember in a second. But you actually made a video on him and you called him out. And I'm like, then I started like became a fan of your channel. And then you saw me in your comments all the time. But it's like nobody's calling these guys out. And I don't understand what the point is. I made a video on it. I just said, look, like, you don't have to push crypto. You don't have to like, but I guess part of it is that these guys, they just don't know, or you know what? I don't want to be super mean. I'll just say that like, they're not as experienced as they think. And I think early on in everyone's finance journey, they think they're smarter or better than they actually are. You know what I'm saying?
Well, what happened was a lot of them bought Tesla stock when it was a lot lower than where it's at now. And once the stock went up massively, they suddenly thought they were freaking geniuses because they bought Tesla. And that warped their perception of investing. And you can see what's happened, what's resulted in that. They've lost an absolute fortune. And they're going to continue to lose a lot of money because I don't really think they've learned their lessons.
I wonder how many of these YouTubers stick around, you know? Like, truthfully, I wonder how many of them stick around. I mean, they're probably still gonna get views, but how many courses are they gonna sell now, um, that you have people calling out the course? Like, for example, there was a course you called out where it's like the guy can't, calculate the PE ratio properly. Like, talk about quality control.
So I just made a video about a new thing that he's selling, and I didn't even realize this, but he has these like different memberships where you can join a Discord forum for each like a different stock,
Oh,
and you
like
pay a certain amount of money.
Amazon and like
Yeah,
that kind, yeah, yeah, yeah.
but he actually transposed like under his Amazon Discord, I think he had Tesla, and under Tesla he had Amazon. So he didn't even edit his freaking offerings for people that were going to sign up for it. Like it's such a sham, and it's so obvious to me. And it's just sad that people don't see it. But like to address your comment on people quitting YouTube, they're not going to quit because they're so large. They can say whatever they want and ruin people's lives, and they're still going to get hundreds of thousands of dollars or even millions of dollars a year. So they're not going to quit.
And you know what? Part of it is, I think, you know, at this point, if people are still using their recommendations and that kind of stuff, I think they kind of deserve it. You know what I mean? Like, um, I don't know. Like, it just, it seems like if you get burned this much and they're not taking accountability, it's one thing if you take accountability and you're just like, hey, you know what? This stock went down and this is why I'm still a believer in the stock, and you walk people through it, or it's the stock went down and I screwed up. Anything other than those two responses, you're a shill and you don't know what you're talking about. You know what I mean? And so is what it
Yeah.
is.
Yeah. Yeah. A lot of these YouTubers, especially Jeremy, has put a lot of his brand behind some of the stocks that he's bought. And he kind of got in that trap where he had to keep buying the stocks because he
Yeah.
couldn't admit that he was wrong. And you at some point you have to say, yes, I was freaking wrong and I apologize. But they can't do that. Or some people are too prideful to do that.
And somebody just put in the comments bald conversation. Listen,
Oh
this is
yeah,
a
we're bald.
this is a conversation of the shirtless man and the hairless man. That's how we do this.
Yeah. And I just noticed how pale I look. You notice that? This light
Now,
makes me look
question.
pale.
I got a question for you. Now, our audience always loves to know like more about us, right? And so I got a question for you. So my audience knows that I got a baby on the way. So any day now, my wife's going to deliver. And so, question for you is, how do you manage work, YouTube, and family life all at once?
It sucks. It sucks really bad. I mean, like, people think, I spend a lot of time on YouTube. I literally come on here when I have free time. Like, we just put my son to bed. My
Yeah.
daughter's falling asleep. My wife's everything's settled down. Everything's cleaned. We're good. I come out here, I pump out videos for like 30 minutes or an hour, and then I go right back inside because that's literally the only time I have. So I don't really have time to like edit a lot of videos and do a bunch of special stuff. I just come on, do a live stream, and leave. And that's the only way I can manage it. And I can't do anything else. I mean, I have a full-time job, I have kids, and I have YouTube, and that's basically it.
Yeah, fair. You know what? Same here. And in fact, I'll tell you a little funny story about myself. For many, many years since I started, but from when I started my career, I actually only did investment research at home, and then of course like work, like busy season and all that stuff. And so I needed to change it up a little bit, have some sort of an artistic outlet. I actually started doing stand-up comedy all over the city of Toronto. And like I ended up performing at every major club and everything. I just needed something else. But now with the kid on the way, it's only going to be YouTube and
I mean,
and work.
honestly, one kid isn't that bad. It's that we had two back to back. That's where it got freaking wild. It got 20 times harder because you have to pack for twice as many kids. Both kids are crying at one time. It becomes an absolute disaster.
Yeah, that's fair. That's fair. I don't know what I'm doing, so we'll see. We'll see how this goes.
I believe in you. You'll have to sacrifice some time. Like maybe you won't have as much time to. Like, I don't know if you edit a lot of videos or stuff, but you may want to focus more on like just going live or something like that. It's just
Yeah, like right now everything's edited. The reason why I have the channel the way it is because I focus on, you know, like those the I would say that I think you and I would agree that like maybe around like 95 or maybe even closer to like 97, 98% of investors are probably not going to make money trying to outperform the market, you know. Um my channel's largely focused on the people who are in that like 2 to 5% who they have their sort of like, like with your work money, like, like with work, they'll take like 5 to 10% of your income and you'll put it in like a diversified portfolio that like tracks, your index. Here in Canada, it's like the TSX, US, you got your S&P or your Russell 1000 or whatever it is, right? But then, as you move on in your career, you're going to have a little bit extra money and you can decide, are you going to buy the fancy sports car with it, or are you going to start managing a separate fund on your own? And for those people, that's kind of like what my channel's targeted towards. So, hence the very small, like slow growth, not much growth at all, really. It's more like people who very scientifically look at stocks, model everything out. Like when I talk about modeling companies out, I'm talking about going into intra segment details and forecasting that stuff out, understanding sort of like the relationship between the balance sheet and the cash flows, and trying to address certain risks. Like just yesterday, we had a call with the Patreons, and I was explaining to them why, and you would understand this as a CPA, why it's a huge risk if AR is growing at a rate faster than revenue. You know what I mean? Like you would
Mhm.
understand. For those of you who don't um, understand why that's a risk, it essentially means that the company's not generating cash flow. So it could be an indication that there's fraud happening. So you got to be very careful if you see something like that. But you only really see that kind of stuff if you're really getting into the nitty gritties and modeling the companies out. And so that's generally who I focus on.
So, I mean, do you buy any like unprofitable companies? It's like speculative plays, or is it more like profitable companies that are trading at really cheap valuations? Like, but what's
So
what's kind of
ge-
your strategy?
so generally the way I buy companies is um I don't have a hard and fast rule, but I tend to stick with companies that are generating an income or extremely likely to generate income. Because like every once in a while, companies will go into a loss position and it might just be temporary, and that's fine. There could be like a workout situation or that kind of stuff. But generally, the idea is that they're going to be profitable very soon, if not already. Um, they and then I just follow the four Buffett rules, which is just rule number one is it an easy to understand business model? Does it have strong economic characteristics? Is the management willing and capable, or sorry, is the management capable and willing to work for the owners? And is it selling at a sufficient enough margin of safety? And that's it, because the point that I try to make with everyone is just because you think you have the analysis down, and like I don't know how many lines this is. For example, my baba model. My baba model is a 215 line baba model, right? Just
Oh
because
my
I think I
lord!
have, sorry.
I said, "Oh my lord!" Sorry. Go ahead.
And that's a small model, right? Like when I worked in investment research professionally, we would have like 1,000 line models, right? But and for my work, the company that I work for, I model them out and we have 1,000 line models as well, right? But um just because you model these companies out in great detail doesn't necessarily mean you have it right. You see what I'm saying? And so that's why you got to focus on having a strong margin of safety, but also focus on diversification in your equity portfolio, right? So it's like, yeah, this could be, and here's where the best investors in the world disagree with me, like a Manish Pabrai or Charlie Munger. They disagree with me. They say, hey, you're not going to find great opportunities all the time. So if you find something, go pretty heavy on it. I say I don't think I'm smart enough to even recognize if I can recognize a great opportunity, and so I'll probably only go max 10%, but even 10% is a very rare type of situation that I'll go into.
Yeah, I actually 100% agree with you. I never got that concept of, oh, just put 40% of your portfolio in one stock, because even if you've done all the research and you're 100% right, there's unforeseeable events that could happen that totally change everything and just could destroy your portfolio. So I would never put more. I mean, me personally, I'm an index fund investor, but I would never put more. If I did buy individual stocks, I'd never put more than probably 5% in any one company.
Yeah, that makes sense. And I mean, it just comes down to, and I try to tell all the people is that like, everybody who's on my Patreon or whatever, um, if they think I'm so smart that they're going to subscribe to the Patreon, then why am I the first one to say that I'm not smart enough to trust myself to go all in on something? Do you see what I'm saying? And so why should they? And like we've sort of just back to your original question about like whether they're profitable or unprofitable. Um the challenge I had when I first started the YouTube channel is like I tried not to like be overly um what's the word, negative on the more popular stocks. I just didn't cover them. And the reason why is because I publicly went short on AMC theaters. I don't know if you remember that. You know, when Wall Street Bets was
Oh, I remember that.
pushing.
Trust me.
So I was on the opposite side of that transaction and I publicly went short on AMC. And I think the stock was trading at $30 per share. I put that video out and the amount of dislikes and emails and like vitriol that I got from publicly going short on that, I'm just like, you know what, man? I don't know who's on the other side of these videos and what they can do. And that might just be me being a scared Canadian, but like, I was just like,
Dude, no, there was something very off about that whole AMC community because I experienced the same thing. Like I made a video about trades and how he's an idiot and how AMC's garbage. And my like to dislike ratio was literally 5% likes. 5% likes to 95% dislikes. Like it was insane. And you would get all these crazy comments. It was like there's just something off about this whole movement. Thankfully, it's died down because they finally realized that it's a garbage company. But for a while there, it's like, holy crap, man, these people could potentially come into my house and do something to me. I don't know.
yeah. So tell me, what made you get your CPA in the first place?
Uh, Excellent question. So when I was in the army, I was infantry and I didn't have any skills. And when I was getting out of the army, I was terrified because I was like, I don't know. I don't like what job am I going to get? Some freaking
Yeah.
stupid contractor job. So I was like, I got to get some kind of skill. So I tried financial advising for a couple months. That was a disaster. I hated it.
It's a little
And
scammy, eh?
it's 100% scammy, dude. It's
Yeah.
horrible.
Yeah.
And as if you're an index fund investor and then you become a financial advisor, you're gonna have an internal conflict. But I quit that and I started getting a bachelor's in accounting because I was like, okay, maybe I'll try this. And then ever since then, that's just kind of what happened.
Yeah, fair enough. Yeah, and you know what? I actually started off working at our largest bank here in Canada before I got my job at a big four accounting firm. And same thing, like um, you were pushed to sell products, whether or not they needed it or not, you know, and that was kind of the motive. And I always thought that there was a bit of a conflict of interest because you weren't actually paid on selling products, at least in the branch network. But if you weren't selling products, somebody's having a conversation with you. You know what I mean?
Oh yeah, I mean, as a
Yeah.
financial advisor, we were incentivized to sell whole life, and well, obviously because it paid the highest commissions, and the company got a cut as well. And that's the most expensive insurance you can get, and most people don't need it, and most people cancel it after a couple of years. But it doesn't matter because it gets you a lot of commissions. And we were putting people into loaded mutual funds where they pay an upfront fee of like 5% or more every time they invested. Like it's just a total scam, you
Yeah,
know?
exactly. Now, question for you. What is it? I think everyone's trying to figure this out. What is it that like pissed off or turned everything money away from you? Like, what was it that started this whole thing? Now, I'm not in the whole, like, I don't watch every video, so I miss out on stuff. So tell me what you think is what caused that to happen.
Well, Everything Money probably didn't really know who I was. So they had Seth on there. I'm sure you know who Seth is, right?
Seth was the bearded guy, right?
Yeah. So
Yeah, yeah,
Seth
yeah,
was like
yeah.
a really cool guy. You know, he was very
Yeah.
personable, relatable. And what happened is Seth came and did an interview on my channel. I invited him because he
Oh,
actually would
nice.
watch my videos. And so we had a good interview. I didn't think anything was bad about it. And then he went on Capital Mindset, another YouTuber I roll with. He went on his channel, and I guess there was more drama there. But apparently Paul Gabriel, Small Gabriel, got mad that Seth was coming on other people's channels because he wasn't into collaborations, even though he has collaborated with other YouTubers, but whatever. And apparently they fired Seth. They got rid of him because of that. So ever since then, it's kind of like, okay, you fire Seth and you claim your value investors, but then you're all about day trading and
Yeah.
selling options. Like it doesn't mesh. So
Yeah.
eventually I'm like, yeah, these guys are just as bad of grifters as everybody else.
Well, what I always found was weird was like your value investors, and then you have that morning show where it's like you're trading, like it's like day trading or whatever. It's like you're the candles and sticks thing. I don't actually understand any of the like the indicators or the technical analysis, any of that stuff. I never really got into any of that stuff. But like it's crazy that that's on the channel now. mind you, the one guy, the Paul guy, he did say, "Look, I don't understand this," but they put it out on the channel anyways. But like, what is that really telling your audience? You know what I mean? And so I don't know. I think the comment about um Paul suggesting that he's the LeBron James of finance,
Sorry.
like I don't understand. Like I don't like, just because you have a large um following doesn't necessarily mean you're a good investor, because you don't need to be a good investor to have a large following on YouTube. I don't understand how he like conflict, like how he puts those two together. And like, that actually pissed me off to the point where I went on your channel and I was waiting for you to put a response to that. And finally, when you did put a response, I put a note right in your video and I was like, man, like, and I wanted everybody to know, like, this guy's smarter than like half the YouTubers out there. And like, you probably should be analyzing more stocks, like even on your live streams. Like you did one on Sleep Number, that was pretty good, right? And I haven't seen more, but you really should be doing more of that, because like I think people get, I think people confuse how strong CPAs actually are when it comes to analyzing securities. And like, I don't think people realize how strong they are at it. Now, you don't learn how to like invest when you go through the CPA program, and that's fine. But you learn financial statements, you learn the relationships, and you learn pretty much to catch a lot of bullshit, right? And so, like, I was happy to reach out to you.
Yeah, I think CPAs are uniquely qualified to at least look at the financials, because like most people when they buy stocks, they don't look at the financial statements. It's just
Yeah,
kind of like, oh, is this company the future and is it growing revenue? Oh yeah, let's buy it. But you have to actually look at other stuff to see if this company's garbage or not. And like, it's actually not that hard. I mean, maybe because I do it for my career, it's a lot easier. But to me, it's easy. It's like, okay, this I could look at a company in like 10 minutes and say, yeah, this is total trash. Or I could say it maybe has potential at the right price. So it definitely is a valuable skill. The reason I don't do it more is I just don't have the time
yeah,
necessarily. Because like I can go on there and do a live stream, but I would just be diving into a company, and even
yeah.
I can like miss something that could mislead somebody. So you have to have some kind of preparation when you do that, as opposed to just taking a crap on Jeremy or something like that. That's a lot less. You know, that takes a lot less brain power. But
Yeah, and don't let me
you're right.
derail your success, because like, if people want a boring channel, they can come to mine. In fact, there's people in the chat saying how boring I am. Good. Good. Boring makes money, guys. Like,
He's
actually,
wearing a
there
Fufu hat, guys. That wasn't funny.
yeah.
Come on.
Yeah, don't you guys think that's fun? No, but like, there's actually a mutual fund company out there that their tagline is "Be boring, make money." They're Canadian fund managers, but like, that's really what it is, right? But okay, so question for you now. I know, like, the audience knows that you are primarily an index investor, and that's totally fine. I got a hard question for you. What are your thoughts? It's a pretty easy answer, but what are your thoughts if someone were to say, okay, the Schiller PE ratio right now is 30 times earnings, so it's double its historical PE ratio. Um, is it a good time to be investing in index type securities? Why or why not?
It's always a good time to buy index funds, because at the end of the day, part of the philosophy is you can't predict the future.
Yeah.
You know, maybe because like the Schiller PE is a trailing metric, correct? I mean,
Yeah.
it's
Yeah.
not looking at the past. Well, if earnings are going to blow up in the next couple of years, okay, maybe you're buying at a good price. You don't really know because it's impossible to predict the future. But when it comes to buying an index fund, it's like, okay, even if I buy at an all-time high and the stock market goes down, which it did with my most recent Roth IRA contribution,
Yeah.
I bought at the peak, literally. I'm not selling that for 30 years.
Yeah.
30
Exactly.
years. I don't care. It doesn't matter to me. So I just buy consistently, and in 30 years, hopefully the world is a more wealthy, productive place, which I think it will be.
Yeah, and I mean, it reflects profit essentially, right? Either that profit is paid through in buybacks, or it's reinvested into the company, or I mean, it's paid out in dividends, which the index adjusts and reinvests. I think that's how they would do it, but yeah, I think that's the right answer. Like, in a long enough time horizon, you're fine with the index. It doesn't matter, right? I think that's the right approach.
Yeah, assuming the world becomes a better place. I mean, if
Yeah,
there's like a nuclear catastrophe, yeah, your index is going to be garbage. But at the same time, if the index does really bad, most people's individual stocks are going to be dragged down with the index as well. There's going
Yeah,
to be very few people that actually buy the stocks that do well in the kind of scenario where the index does horrible.
that's right. And I mean, if the index is doing horribly, it's also indicating that there's challenges to come in like down the horizon. So like, are people's home values getting hurt? Are they even still employed, et cetera, et cetera? So like, you're right. So then, of your play portfolio, what are you don't have to disclose it if you don't want to, but are you holding any individual stocks right now? And if you are, why are you holding them? This is turning into an interview.
I'm a Baba Shill, man. You didn't know that? Yeah, I mean, basically, I have a Robinhood account, and
Yeah.
it's like but basically all Baba stock. That's it.
Yeah.
I had a couple other stocks in there, but I'm just such an index shill. At a certain point, I get tired of having a bunch of individual stocks. So I actually sold a lot of them. I had Geo Group, which is a private prison.
The Michael Burry stock. Yeah.
Yeah, that's actually crushed it recently. Like I was actually pissed that I sold it, but yeah, I had that. I sold that. I had Meta very briefly. I mean, it had like a quick run up, and I sold it, and then a couple other ones. But I just have like Baba, and then like a couple $100 in Baidu. And I think that's basically it. But it's basically Baba.
And so, what are your thoughts on Baba? Like, there's a lot of risk. Now, people get mad at me on my channel because I mostly focus on the risks of investing in Baba. Although I'm bullish on the company, I do talk about a lot of the risks in China. For example, the demographic issue. I break down the real estate situation. I break down the export situation. Today, I put out a video on the potential the potential removal of the Hong Kong peg, etc. What are your thoughts? Like, what is your thesis behind Alibaba in spite of the risks?
So, I mean, honestly, the big reason I bought it, number one, was China is very underrepresented in the global index. So my index portfolio is literally every stock in the world at market cap weights. China, even though it's the second largest economy in the world, is a very small percentage of that index. So if I'm going to make a speculative bet somewhere, I'm going to do it in a part of the index that isn't massively overrepresented. Like, why would I buy a US stock when I already have a pretty significant chunk of that in the index? So I said, okay, China, second largest economy in the world. I think people are crapping their pants about a lot of things that may work themselves out in the long run, like the auditing issue. We'll see about that. That's actually a big thing that's coming up. And there's a lot of propaganda out there. I'm not saying China's the best place in the world, but it's also our geopolitical enemy in the United States. And when I see a lot of YouTubers talking about it, it's like, oh, there's a drought and it's going to be the end of China. And oh, all Chinese stocks are going to zero. Like, to me, it just seems like there's a massive overrepresentation of fear and negativity. And to me, that's an opportunity.
Yeah, exactly. And like, I would say that I'm super pessimistic in terms of the way that I'm valuing out Baba. Some of the Patreons actually say that I'm a little bit optimistic on China, but I'm pessimistic on everything else. Like their total China commerce business segment. That's what I'm talking about. But overall, like even when I'm being pessimistic and I use a 10-year valuation model, a 15 times multiple, which I mean the overall market on average has a 15 times multiple, and Baba really is a representation of a lot of businesses, but a lot of important businesses in China. And so a 15 times multiple is fair. I'm still getting to an above $200 per share valuation, despite all of the pessimism. Now, could there be war? Could there be serious like geopolitical issues? All that, of course, there could be. That's why we focus on diversification. That's why we say we can't be all in on anything. You know, I've had people message me and say, "Hey, I'm 100% in Baba." I'm just like,
oh God,
oh, you know.
Yeah, that's why like it's hard because people like they look at me and I bought Baba and obviously I'm down. I think everybody that's bought Baba is probably
I'm definitely down as well. Yeah.
And they're like, "Oh, you have all your money in Alibaba." It's like, no, moron. I have 5% of my portfolio in Baba and 95% is in a global index. That's why I did that because I didn't want to take such a massive risk that I could potentially lose all my money in a freaking Chinese company that could be delisted or potentially nationalized in some insane scenario.
Yeah, fair. And when it comes to the what is it called? The accounting issues, although I feel as though you're more likely to have accounting issues with international issuers, I just don't see it with Alibaba. I would see something coming up in the numbers at least. I haven't seen anything really come up in the numbers, and that's a very like weak type of analysis anyway. So I wouldn't like rely on that. But like I just don't see it. I've been hearing rumors. I've been talking about it on the channel where like the PCAOB. Have you ever gone through a PCAOB audit, or you understand anything about it? Okay,
I
so
just
like
work at a small tax firm.
okay, so I used to audit U.S. issuers in Canada, and so I've had files that have gone through PCAOB audits. Those are just an audit of the auditor. So like as like we were the big four, they were auditing our files, right? One of the main areas that you would audit to make sure that like the auditors got right is cash, because if you have cash right, you can have a lot of the like it essentially says that a lot of the other lines are correct. I'm not saying that it negates the ability to have fraud and stuff. I'm not saying that at all. But if the company year after year is saying they're making this much cash and this is what's listed on the balance sheet, and year after year you're able to vouch that, that's a very good place to start. And I would suspect that the PCAOB people would not have left early if they were finding issues. Now, I might be wrong, but sometimes it's fun to speculate, and I'm speculating that I think the audit issues are going to go away. Delisting was always just a fugazi, anyways. Who cares if they're delisted? But I think the audit issues go away, and there's a lot of people on my channel there's that, and I think they rightly say that the minute the audit issue gets cleared up, it's going to light a fire under the shares a little bit. I mean, may not necessarily go back up to 200, may not even go up to 100, right? But I think it's a step in the right direction.
Yeah, honestly, in my opinion, the audit is the biggest deal because people also talk about like the lockdowns. It's like, okay, well, the lockdowns aren't going to last forever. Obviously, that's going to end at some point, so that's a temporary problem. The big issue is whether their accounting is complete and utter garbage and whether you can trust the numbers. If you
Yeah,
can trust the numbers based on this audit by U.S. authorities, that's a huge bullish sign, in my opinion.
yeah,
So it's actually like, and they're going to release their initial findings in the next couple of weeks, I think. And it's kind of a big deal. Now, if they come out and they say there's like blatant fraud and the numbers are massively off, though, and the work papers are garbage of the auditors they audited, maybe I'll consider selling.
yeah.
But if there's really no like material issues, like, oh, they found one thing that was wrong in one part of a work paper. Okay, that's not a big deal. So it's going to be a big thing, and I'm just excited to see what happens. And if it comes out positive, I think there's going to be a lot of potentially positive catalysts.
Yeah, I think so too. I mean, the major catalyst, and you're seeing it in the chat here, and I think Kid Freshy was the one who said it in the chat here, but and I think he's right. Where the biggest risk is the geo issue now, but more importantly, just adding on to what he was saying is, I think if the West goes into a stronger recession, of course, if we're not buying products, China's not shipping them and selling them and producing them and all that stuff. That could really hit Alibaba, especially their China commerce segment and their international commerce segment. Those two segments, just to make everyone aware, make up how much is this? They make up 75% of the company's business. So I don't care how bullish you are on cloud. I don't care how bullish you are on their digital media segment or anything like that. Selling products is 75% of the business still. So it goes with how the direction of that business, right? And so
And plus, like the whole world is so interconnected now. Like we have very deep ties to China. And it really makes me laugh because like there's so many US companies that have operations and that have massive amounts of revenues in China. But they ignore the China risk for those companies. Like especially Tesla. People talk, "Oh, Tesla's amazing, it's perfect." They have a freaking factory in China, you clowns.
yeah,
They,
yeah,
they they sell a lot of cars in China. It's a big part of their market. People ignore that, but they
yeah.
have no problem attacking Baba because it's 100% Chinese company, so that's obviously a terrible thing. But honestly, like my big opinion on Baba, people don't like it because it went down a lot recently.
Of course, of
That's
course.
my honest opinion. Why people
Yeah.
hate on it. That's why people love Tesla and Bitcoin. Oh, it went up a lot. Baba went
But
down.
like
It's bad.
the thing about being a value investor, and like I know it's not for everyone, But like one of the things that you have to be aware of is like when you buy stocks that you think are cheap, you have to buy them knowing that the stock can go down another 50% to 70, like even like to 90%, and you're comfortable with it going down that much. Like you're not right or wrong. And I think this is a Buffett quote. You're not right or wrong because the stock went down after you bought it. You're right or wrong because your analysis and your research are sound and correct. And many times I've purchased securities and they've gone significantly lower than where they should be. In fact, sometimes I make a mistake where I'll see a stock that's like super cheap, and then I'll be like, okay, you know what? I know the market's going to be a little bit. I think we've all done this. Like, I'll be like, oh, I know the market is going to be down even further, and so I'll wait for the stock to get a little bit lower, and then I'll buy. And the funniest one this year, and I keep kicking myself in the butt, is H&R Block, because I'm an account like I have an accounting firm, a very small one. I don't want to like over exaggerate. I just have just one corporate client and a couple of other clients.
He
I'm trying
owns
to wind it.
KPMG.
Sorry?
You own KPMG, don't you?
Yeah, I own KPMG. Yes, that's
It's your business.
You know what it is? When you start doing taxes, all your family and your friends come, right? And then eventually someone owns a business and they pay you enough and you're like, okay, I'll take this guy on as a client, but that's it, right? But I guess you're on the different side. You're trying to grow your business out, right? I'm trying to like
Yo,
get a
I'm working for a firm right now because I'm
oh,
still
you're
pretty
working for a
new.
firm.
Yeah, I'm still pretty new to taxes. I mean, I have the license, but I've only done taxes for a year, so I don't feel comfortable to go ahead and start my own firm at this point. I need to get
Yeah,
a little bit
fair.
better.
Fair. Yeah, I did it. I did it for a couple of years. I did the audit and tax rotational. So I did the audit busy season and then I did the tax busy season. So I didn't actually get like my summers off when I was at KPMG, but you
Yeah,
learn a lot more, right?
yeah, that's
And
true.
it paid a ton. And I'll come to you for tax advice because I'm working in America now, and I just got my visas to live and work in the U.S. as well. But I know nothing about their tax system, and so you'll be my strongman tax accountant. So I got another question for you. You mentioned that you owned Meta, and I know that a lot of people who are in the chat right now probably own Meta or have a strong opinion, pro or con Meta. What are your thoughts on their investments into um, AR and VR and how that plays out?
I honestly, so I briefly owned it and I sold it at like a small profit. I made like $50, not a big deal. But I mean, to be honest, I don't really understand the metaverse that well. I don't really understand the whole thesis behind it. I mean, I'm sure they have a good reason for what they're doing, but when I look at it and what the market sees is they're burning cash hand over fist. Like it's an insane amount of money that they're spending on it, and it seems like it's something that it doesn't even seem that great to me. It almost seems like it's going to create a corporate hellhole, like a dystopia where you have to virtually go into working from home, and you have this little avatar. Like there's it just kind of rubs me the wrong way on
Yeah.
top of just the amount of money that it's burning. But I mean, the bullish thesis on Meta is number one, that works out and they actually make an absolute fortune off of it. And
Yep.
number two, they have a core business, their family of apps, that is an absolute cash generating machine. So at the end of the day, they could just abandon the metaverse, even if it doesn't work out, and they could the company could still do extremely well.
Yeah, I agree with you. And like I'm bullish on the metaverse. You tell me what your thoughts are on this, but I like the idea. Like I have a few screens here right now. Think of like, like a trader's desk type of thing. I just set up a couple of screens. I like the idea that I could just have a laptop, throw on um like the glasses or whatever. It would have to be something as like little as these glasses, and then I can have multiple screens in front of me. And so like um I don't know if you've like you probably like do vouching when you do your tax files. And so like when you have multiple screens, it's really helpful when you're reconciling something, right? Like you'll vouch a specific line on the tax upload to a line on the financial statements, and it's nice to have those available. We all have multiple screens for that, but how great would that be in sort of like an AR type environment? Like I would pay for that.
Yeah, I mean the technology I think will get there at some point. It's definitely not there right now. I mean, I'm one of those people that kind of waits for something to really develop before I spend money on it. So
Yeah.
at some point, I'm sure I would make an investment in like metaverse glasses that are really small, and I don't have to wear this bulky freaking thing. But
Yeah,
it just seems like it's an investment that's gonna pay off so far in the future, and there's so much uncertainty about the whole thing. I mean, when it comes to just the investment thesis, I'm not a big fan of it right now, and I
yeah,
can see why the market's freaking out because they even said in their earnings, their most recent earnings, they're gonna be spending way more next year. So it's like, God, what is Meta's profit and loss gonna be next year? It's probably gonna be absolutely awful.
yeah. And then yeah, I think well, what exactly is it gonna be? I think we have it right here. I think they're gonna make like $3 a share. Maybe do I have that right? I don't know. Oh yeah, that's net of the capex burn. So I'm forecasting that they make $9 a share and $6 is just capex burn. So 2/3 of the income that they're earning is getting burnt.
Yeah, it's sad. Like I mean, I'm trying to remember what their bottom line profit was, but it was like in the 30s or 40s, I think, before this whole metaverse thing happened, and I think it's collapsed to I think the most recent earnings were like 15% bottom line profit. So it's absolutely annihilated. I mean, I could be 100% wrong. You can check
No,
that
you're
out.
right. I'm looking at the numbers right now. Net income
It got
margin.
absolutely wrecked. It's like, holy
Yeah.
crap, what are they doing?
Yeah, and like if they're lucky, they have a 21% net income margin, but then you got to pull the burn capex out of that, right? And so the viewers might not understand this, but not all of your expenditures get captured in the P&L. Sometimes companies will capture capex under the basis that it'll have a return in the future, but it may not necessarily have a return in the future. They just manage to find a way to capitalize it and get it by the auditors. And so you have to take a position on that as an investor, and you have to calculate a burn there. And so yeah, you're right. There's going to be a strong burn there.
Yeah, because capex eventually does make its way to the P&L. It just takes
No-
time because of depreciation, and like depending on
Yeah.
how long the asset is depreciated, it could take years to really see how that happens.
So now there's one industry that like a lot of people every time I put out a video on it, nobody watches it, like 3 people watch it, but you're living in it, right? So I'm going to ask you about this. What are your thoughts on the US housing market? So this is an industry, just full disclosure, I am a US housing market shill. And
You show a
I
lot of things apparently.
I show a lot. Well, I'm doing a lot of research, right? Like I don't know, I think we have like 60 or 7. How many names do we have right now? We have 64 names in the tracker that I'm currently tracking, and I pick a few that are in my portfolio, but some of the names that are making it up to the top of the tracker, which is like share price as a percentage of its intrinsic value. And so obviously the lower the share price is relative to the intrinsic value, the higher it's going to be on the list. Some of the names that are sort of crowding that top now are home builders. Now, a lot of people are saying that, over the next year or two, maybe 3 years, the home builders are going to be really hurt because of the high rates in the US. And I think they're absolutely right. But, I don't invest with anything other than a 20 or 30-year time horizon. And I think over the long term, if you find builders that don't have reckless spending, they don't have a ton of debt that's not construction related debt. So they build the homes and then they already have buyers for them. I think they survive and they do well, and you're picking them up at like 20-25% equity yields. What are your thoughts on just the home builder stocks in general? Have you looked at those at all, or any thoughts on that?
Honestly, not really. I'm not super interested in that whole industry. I mean, to me, it just seems like it's a cyclical industry. I mean, like obviously, when interest rates go up, the whole housing market gets absolutely wrecked. And then at
Yeah.
some point, interest rates get cut, and then it's pretty beneficial for the housing market. So, I mean, I agree with you. If there's a home builder that's going to survive these high rates, and then they cut rates, which they eventually will do at some point, some of those companies stand to benefit. But real estate's just not. It's not something that's ever really interested me. I mean, I bought my house. This is my house. I live in it. I don't plan on buying any rental properties. I don't really follow the market. I don't really care. I can tell you right now that the market is insane because like my home price has appreciated 20% in the last year or two, and interest rates have more than doubled. So to be able to afford the same house that I'm living in right now, were I to buy it, it would be insanely more expensive.
Yeah.
So the market, I think, at least where I live, it's going to get absolutely wrecked if we keep having high interest rates.
Yeah, I think so too, especially in the medium term. And somebody mentioned it. I think it's Happy T that mentioned it in the chat. There's just a serious shortage of supply as well. So it's like the housing market just got underbuilt in the U.S. and And I agree with him. And I think part of that is that there's localized issues everywhere in terms of building. And so let's see how this plays out. But so what do you got
Yeah.
for me, strongman?
Nothing, man. Are we done? We can do some comments. Anybody got any questions? Tell us a little bit more about your so were you a CPA?
Yeah, so I am a CPA. So I actually started my career at a Big Four, and then right after there, I went into controllership. So I was assistant controller, and then from there, I went into sell side equity research. I covered oil, gas, pipeline, that kind of stuff, and then I went into corporate. And generally, what I do is I'm sort of at like the senior level, so like director or VP, call it one of those levels, and my job really is FP&A, so financial planning and analysis, and investor relations. And so on a day to day, I model out our business. I try to think about sort of like what's going to impact us in the future. I talk to all the segments in the business, anybody who's driving our revenue, to get an understanding of how to grow the top lines or what we're doing to grow them. Try to get an understanding of our expenses as well and model that out too. Also focus on investor relations. We talk to the street, etc. Involved in every conference call, etc., etc., etc.
Man, so okay, so you have a real job, which is a plus, because there's a lot of YouTubers that don't have real jobs. And if somebody
Yeah,
doesn't have a real job and they're doing YouTube, they just have YouTube full time, it's kind of suspicious to me. So you're a CPA, okay, that's a big plus in my book,
yeah,
and you have some experience with like stock valuation, basically in the professional world.
yeah. Like sell side, at least. I mean, the there's a plus and a minus with sell side. The plus is you get really good at modeling companies. The minus is you might not necessarily be a good stock picker working on the sell side. Now, nobody on the sell side is actually going to tell you that because everybody has like a bit of an inflated ego. Well, you kind of have to have an inflated ego to go work at the Goldmans or whatever, the Merrill Lynches or whatever. Um, they choose like the kids who have like the highest GPAs or whatever. But if you're really humble and you understand yourself, like you have to say that just working in the sell side, you probably don't have enough tools to know beyond your own industry. So like I covered midstreamers, power companies, renewable power, that kind of stuff. Um, Everything else I have to learn on my own. So that's why I always say that like just because you're on the sell side doesn't necessarily mean that you're going to be a good investor.
That makes sense. So, like, how did you teach yourself more about investing? Like, what would you say your number one recommended source would be?
So basically, any sort of piece of material from people that you think are intelligent. I would say I started with Peter Lynch back in like I don't know, the early 2000s, maybe yeah, maybe early 2000s. I started with Peter Lynch. From there, basically anything Warren Buffett ever put out. Now, back when I started, there was no YouTube. There was none of that really. And so it was just a lot of books. So I just go to the bookstore and I just grab a book on investing. Then I found value investing and I just went from there. And then over time, I found that I started like moving away from just following like what Buffett would say or just following what like Munger would say, et cetera, et cetera. And I just started creating sort of what works for me. And for a long time, what worked for me was just um, strong, well capitalized, dividend paying organizations because I just tried to keep it very simple. But then over time, I realized, even that's a mistake because one of the mistakes you make, and I think a lot of the people in the chat might relate to this, is when you're just focusing on dividend paying companies, you'll focus on the strength of the dividend, and you may not necessarily focus on the strength of the company, and you might end up chasing yield. Well, if you chase yield, sometimes the market is telling you with the yield that it's not necessarily um, the yield is not necessarily permanent. It might have to come down, i.e., they might have to cut that dividend, right? And so um, that is a mistake in itself. So, like, I don't know what the chat thinks about that, but I did that for a while. But then, I just decided to go after companies for I guess it's been a while now, maybe 10, 11 years or so, where it's just following the four rules, right? I mentioned them earlier in the video. I won't do it again, but it's just following the four rules and um, Hopefully it works out. And you know what? The truth of the matter is that you can say that you're a good stock picker in this environment. And up until a year ago, you would have just been benefited from this insane levels of monetary like stimulus over the last 10 years into the market. So everybody's a genius when this market is going up, right? Especially in 2021. So I think we're going to find out who the real like good like decent value investors are in a market that's going down. You know what I mean? And we'll see how this plays out.
Oh, and by the way, if you didn't know, everybody, Paul Gabriel has underperformed the market even when it's going down. I just wanted to put that out there. But no, I 100% agree with you. I mean, like you can't judge somebody's performance on the short term. What concerns me about YouTube in general is I can see people that are just buying absolute trash and pumping absolute trash. And people get mad at me because they're like, well, you're judging these people because the stocks went down temporarily. It's like, yeah, because it's a company that's about to go bankrupt. But you can't judge somebody because a good company has had temporary issues. You have to wait a couple years. And that's the whole problem with YouTube in general is people want a quick buck. They want to make a quick 10x or something like that. So
Well, and then the other problem, and the chat might not realize this, is that you get rewarded by the YouTube algorithm for covering certain stocks that tend to be more like popular in nature. If you want, like, especially last year, this would drive me crazy, but I just couldn't get myself to do it. But if you covered crypto and you covered seriously like overvalued tech names, your channel was blowing up. I remember there was this one channel, and I won't call out names, but like every video, he got 100,000 subs in like the first 10 months of his channel, and every video was, hey, I got 5 new stocks for you, blah blah blah. And it was always the same garbage that was getting shilled. And it's actually funny, like a year later, or I guess a couple of years later, everything's down more than 50%, but you keep the audience, you know what I mean? And so it's like you almost have to grow your channel if you're going to grow it righteously, in spite of the fact that it's growing faster. And I don't think a lot of people realize that. And so I think a lot of YouTubers who use that strategy to just like push the stuff that everyone's interested in, they might not necessarily even believe in it themselves. They might just be saying it publicly that they believe in it. You know what I mean?
Oh, 100%, because YouTube Finance pays way more, or at least a lot more than a lot of other niches on YouTube. So people will be like, hey, I just want to make a quick buck. Oh, I can go on YouTube and make YouTube videos about Tesla and Palantir, and I can get a ton of followers and a ton of ad revenue. That's why people do it. I mean, some people are just not educated and they do like that stuff. But there is definitely a whole industry of people just talking about popular stocks or buying small positions in stocks to make it seem like they have some kind of equity in it, some kind of skin in the game. But in reality, they're just talking about the stock for the ad revenue.
Exactly. And like I did call out one of them on my channel. You can go back and look at it for anybody who's interested. But there was a company called Open Door. I don't know if you guys know that name. They basically like buy and sell houses using some like using an algorithm or whatever. And what's their name? Zillow actually was in that business as well, but Zillow exited the business. I actually did a valuation, full model, full valuation, because I kept getting asked about Open Door because I kept covering home builders. And I valued the company at, I think, $5 or $6. Like I was being generous with $5 or $6 a share when they were trading at 30. You know what I mean? And I think, and you guys correct me in the comments, I think it's lower than $5 or $6 today. And so it's like some of this stuff is easy to see, especially with companies that are not making profits. And guys, this isn't the first time this happened. Go back and see what happened in 1999, 2000, 2001, right? This is not the first time that this has happened. It just happened a lot quicker this time. Back then, everybody was in on it. I would go to so I grew up in a Muslim family, and we go to like these mosques. We were having like these Friday sermons where people were talking about investing into stock. That's how prevalent.
That's when you're in a bubble, when it's in the mosque or church.
That's how pervasive it was,
Oh my God.
And so it seems like people have a short-term memory. I mean, not all the investors were around 20 years ago, but it's not like bubbles and manias don't happen, And if guys like Buffett are telling you that like this stuff is trash or they won't necessarily buy this stuff and they're giving you the reasons why, maybe don't dismiss them so quickly. At least that you could dismiss them, but have a reason to dismiss them other than, oh, you're old and you're no longer relevant. You know what
Oh,
I
dude,
mean?
the amount of times I heard like Warren Buffett's an idiot, he's dead. It's like, are you serious? You clowns are buying the worst garbage I've ever seen in my entire life. And you can just look at what the stock market did after the quick pandemic crash, and it was just obvious to me we were in a bubble. Like
Yeah.
everything else, everything was shut down. The economy was a disaster. And all stocks were going to the freaking moon, and all these garbage companies that a bunch of retail clowns were buying were going up 100, 200, 300%. It's like, obviously this isn't going to last, but people got like, even people that I thought were intelligent got swept up into it. It's just crazy how manias can really infect people's minds.
Yeah, and it comes down to that second question of the four questions, right? Does it have long-term economic characteristics? And for a lot of these companies, the answer is I don't know. You know what I mean? Like, I don't know if programmatic home buying and selling will be the future. I don't know. I see a little bit of like potential there. But I don't see the whole market going there because like when it comes to me selling my house, I don't know if I want to use a program to sell my house. I think I'll go with a real estate agent still. And I might just be old school. I might just not understand it. And that's okay. I don't have to understand it.
No,
I can
I
just buy
would
enough stuff.
definitely go to a human when it comes to a house because I don't trust a program to really identify all the issues that could potentially be going on with the house.
Right. And like there is like for example, here's another name that actually I fully believe in. So there's an investor out there everybody knows her name's Kathy Wood, right? She would pitch this stock by the name of Roku, right? But the one thing that I would tell my audience is go look at those financial statements and specifically look at the stock-based compensation line, right? Because just because a company's making money and just because those revenues are going up, bro, and it's going to be the future, bro, doesn't necessarily mean that they validate question number 3, which is are the management capable and willing to work on behalf of the shareholders? If their stock-based compensation is as much as their cash flow that they're generating for the business, who are they really working for?
In an easy red flag, yeah, exactly. They're working for the employees and the management are making out like bandits. But like an easy red flag is you can look and say, okay, it's unprofitable on the income statement, but they have really strong free cash flow. I wonder what the difference could be. And every time I see a difference, it's never depreciation. It's always stock-based compensation, especially with those freaking tech companies.
Yeah.
So a
Yeah.
lot of those, it's like, okay, yeah, it's got good revenue growth, but a good way to look at it is calculate the revenue per share growth because people are all about the revenue growth with a lot of these companies. What is the revenue per share growth? You'll be surprised. It's probably a lot lower than you think
That's
because
right.
they're
That's a good
diluting so quickly.
indicator. Yeah, and then what I always try and tell people is if you're going to if you're going to use free cash flow, because I use free cash flow to value Alibaba. Alibaba is also a culprit in this whole like high level of stock based comp, and I'm totally transparent about it. Their stock based comp has been running at I can't remember the number off the top of my head, but it's I don't know probably it is 25%. So when I value Alibaba, I'm actually making an assumption on what their stock-based compensation is going to be in the future, and I deduct that amount of free cash flow from like what I'm forecasting that the owners get. Because ultimately, the issue is that if they're buying back stock, some of that stock buyback is buying back shares that they've issued the management. So you got to take into account the dilution, right? And um, I don't think that there's a lot of people that talk about that, and I never heard Kathy Wood talk about it when she was pitching Roku and stuff, right? I actually
Kathy
own a
Wood
Roku
just
myself.
buys hype. I mean, like it was so obvious that was going to be a total disaster. It was just a matter of time.
Yeah, yeah,
But it's crazy how much the whole industry worshipped her. Oh, she's such a genius. It's like, okay, I mean, she had one success with Tesla, basically. And in my opinion, if you have massive success during a market like we had, you're probably a clown, is all I'm gonna say right there.
yeah. And you know what? There's a lot of people, and I would say I was guilty about this when I first invested too, like many, many moons ago. You have one stock that does really well, and then all of a sudden you overestimate how good you are as an investor, you know?
That's what I
Right.
say all the time. It's like, hey, you think you're a genius stock picker, and then that's just the beginning of the end for most people.
And yeah, and you'll take the return that you got in that year and apply it for perpetuity. So you'd be like, yo, I made 25% this year. Okay, good. I'm gonna make 25% every year thereafter.
It's like, yeah, you're not gonna do that. Sorry. All right, so
So
last question before we close this off. This has been a good chat, by the way. See, this guy actually seems like he's legit to me. Okay, he's a CPA. He has a real job, and he has some experience in the finance industry, which is like way more than basically all of YouTube. So I commend you for that. But my last question is,
I
do
gotta
you
put
have
on my
any
Jeremy
index
hat
funds?
for this.
Oh, yes. Do you have any index funds in your portfolio?
I do, and the way that I utilize index funds is at work. You know how you get that 5 to 10% of automatic deposits? All of that goes into index funds. That's something I can't touch. I can't day trade that stuff. It's just in the equivalent of what you guys have as a 401k. So we call it RRSPs in Canada, or RSPs in Canada, or whatever. And so it just sits there. It's been there for a while. It grows every year. A portion of every paycheck goes in. I don't even know that it's going in. I look at the report twice a year, and that's it.
There you go. See, if you didn't have any index funds, I'd be a little concerned. But all
Yeah.
right, guys. Any last minute questions for the honored guest? Tell us about your YouTube channel again. What's it called?
Oh, my YouTube channel is called More Money. Um, it's way less exciting than this channel, that's for sure. I talk. We just go into like deep dive investment research. It's really just an outlet for me because I'm going to be sitting around and doing research anyways, and so I might as well have an outlet for it. And so that's what it is. And we got an awesome community there in our chats, like in our comments. There's I would say some of the smartest minds of audience members that watch YouTube. So we're building a really good thing there.
Good stuff, man. It's nice to see another, qualified accountant and someone that's not a total clown on YouTube. So I appreciate you coming on. It was a good conversation. What outro would you like? Would you like a everything money outro, a Jeremy outro?
We need a Lefave. We had the everything money. We need a Lefave.
All right, let's do a I'm gonna do my favorite one right here. Okay, 1 second. I gotta find a good one here. All right. Bye everybody.
Holy smokers, this ain't no jokers. I was literally about to go to bed.
Oh my word, look at that.
Wow, do we have a lot to get into here today?
Woo, 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 man. Oh.